This is 26th May 25. We need to first see what was happening the previous day. Okay, previous day we can see the market was in a sideways movement. Okay, and today when the market opened, it was a gap up opening, and there is a breakout. Okay, and it's a strong breakout of that range. So what we can expect, an upside move. Okay, let's see. So you need to know some of the rules of price action. For the parallel channel, you need to know that when there's a break of parallel channel, we look for new stream formation. Okay, and within a parallel channel, we do not look for counter trend trading. You also need to know how we count the second entry. We do not enter on first entry because they are risky and they are not high probability trade. We enter at key entry point, which is support or resistance, 21 EMA or trend line at the second entry. Second entry is a high probability trade when formed at key entry point. So let's start. Let's analyze this day chart of 26th May. You can see here the market is moving up. So what I will be looking for, I will look for the failure of second entry short. That is when the bears will be trapped. The market is bullish, and if the bears are trapped, then we will get a very swift movement in the trend direction. Okay, here you can see this green bar broke the previous bar low. So this red bar is the first entry short counted from the swing low. This is the swing low. Okay, we got the first entry short. Then here is the second entry short. This red bar is second entry short because the next bar broke its high. But within 2 bars, we saw this green bar engulfing all those 2 bars. So here the second entry short is failing. It is not able to move the price down, and we are already seeing the price is going up and up. You can draw a trend line to trend channel. It's a bull channel, and on the trend line we are getting the failed second entry short. In this bar, which broke the high of this bar, also broke the high of second entry short. This is failed second entry short at trend line, and this is the first high probability setup at key entry point. This is HPS at KEP. It is a failed second entry short at trend line. Okay, this trade came at 9:25. Okay, within the first 10 minutes. Let us see how much one could have made if you went long on this trade. The risk was of around 28 points and the reward was around, if you stayed till here, it was 45 points. If you carved out within few bars, it would have been 18 points. Okay, let us go to another day, any random day. Let's take 13th May 2025. Here, let's first check what happened the previous day. The previous day we can see there was a bull channel. Okay, there was a small overshoot and the price reversed. The trend reversed. Okay, previous day the market was in the bullish trend, and here we saw the overshoot and the price is coming down. Okay, so what we should be looking for? We should be looking for the failure of second entry long. We usually look for the failure that will trap those counter trend traders. Okay, counting from the swing high, we can see this is the first entry long. The red bar broke the high of the previous green bar. Then this green bar broke the high of the previous red bar. So this is second entry long, and this has failed. Second entry long failed when this red bar broke the low of the previous bar. 2 bullish attempts were over. This is failed second entry long. This was the first attempt by the bulls consisting of 2 bars. This was the second attempt by the bulls, starting with the hammer, red color hammer. Second bar, on the third bar it failed. Okay, so this is failed second entry long, and you can see we are below 21 EMA. 21 EMA not much important. It is because we are in the first 30 or 45 minutes we are looking for the trade. You can draw a trend line here. This is a bear trend line, bear channel. Okay, we are especially looking for failed second entry long when the price is falling. Okay, so this is the high probability trade. Okay, we can mark it as HPS at KEP. Let me be quick. HPS at KEP equal to fail second entry long at trend line, which is the key entry point in bear trend. So we have got the another trade, and what is the time? It's 9:24. Within 10 minutes we got another good trade on a random day. Let's go to, if you want to see how much one could have made, let me show. Since the bar is quite long, you can wait for some pullback and enter somewhere here. Here the trend line. You can enter somewhere here to reduce your risk. Otherwise, if you are taking higher risk, let me. So there is 53-point risk, and the reward was of about more than 100 points. If you consider this bar as the signal bar and entry bar, otherwise you could have waited for the pullback at the trend line. This small pin bar was the right bar to enter the trade. The risk was only of 18 points, while the reward could have been of more than 100 points. You can wait for pullback in such cases where the signal bar is big or the risk is higher. Okay, let's go to any other random day, any month, any day. Okay, here let us see what was the previous day trend before the market closed. The market was in a bull channel. Okay, the market was going up. The and then there was market opening. It was gap up opening, but from the first bar the price started falling, and it is an overshoot. When the market breaks the channel line, we say it is a overshoot. So when there is a overshoot, we expect the quick movement towards the trend line, at least towards the trend line. So we are looking here for failure of second entry long. Okay, so the market is going down. So this is the first entry long. The green bar broke the high of the previous red bar. I hope you can see. Let me zoom. This bar broke the high of the previous bar, and it is an inside bar within this mother bar. So let me mark it as first entry long. Okay. Then this bullish leg was over and this doji bar broke the low of the previous bar. So this is second entry long. This is a swing low. Counting from the swing low, we get the first entry short at this doji bar. This is first entry short. When we are in a downtrend, we can look for second entry short or the failed second entry long. Then we get the second entry short here, and it also failed second entry long. So it's a double high probability setup. It's a second entry short and failed second entry long. Okay, and is there any key entry point? Yes, there is a key entry point. It is resistance. You can see all the bars are having problem in taking the price above this level. There is a resistance. So this is your high probability setup at key entry point. Okay, it's fail second entry long and second entry short at resistance. Okay, which is HPS at KEP. Okay. Okay. So here you can see this is the bar where you could enter. Let me see the risk and reward. The risk is of only 15 points, well, the reward could have been of more than 56 points. Let us go to any other day. Random day, let's go to 25 or 24, any day. Let us check what was happening the previous day when the market closed. Let us see. Here you can see there was some bearish trend. Okay. The price was falling. Okay. So there was a bear channel the previous day. Okay. Here we can see today when the market opened, first it went up, then it started coming down because there was a break of this trend line and it failed, and it tried to break the channel line and then it failed again. Since this is a bear channel, we can expect a formation of new low after the break of the channel. Here is the swing high. From the swing high, we need to see the failed second entry long to join this fall. Okay. Here we get the first entry long. There is a pin bar. Let me zoom. It failed. This is first entry long failure. Okay. Then there was another attempt by the bulls here. They tried second time to push the price up and they failed again. This is the failed second entry long and the market is coming down. There was a trend line, there was a break of trend line. You can expect a new low formation. So this is one high probability setup at key entry point. Key entry point here is also resistance. You can see there is some resistance. Okay. So it's failed second entry long at resistance, which is high probability setup at key entry point. So this is another trade, another HPS at KP. Let me mark. Let me see how much we are making here. One took the trade. The risk was of only 9 points or 10 points, and the reward was of around 28 points. Okay. Let us go to any other day. Let's take November 5. Okay, any day. Let us see what was happening the previous day. Okay, it was quite bullish the previous day. You can draw a trend line, simple trend line, and see the market was in a bullish trend. Okay, and today on the day we are trying to find the high probability setup at key entry point in the first half hour. Okay, this is 1 minute chart. You can see there was a break of the trend line. After the break of trend line, we know there will be an attempt to form a new high, and after new high formation, we can look for correction or reversal. Okay, so the market opening was gap down and quickly moved to form a new high. It formed a new high here, then it went into some correction mode. Okay, and what we can look for, some reversal. Okay, here you can see there were rejection again and again at this resistance. Okay, you can wait when there are so many overlapping bars. You should wait for some trend to get clear. Counting from this swing high, this is the first entry long. This pin bar is the first entry long. Let me zoom. This is first entry long. This bar broke the previous bar high. Then this red bar broke the high of the previous bar. Okay. This bar broke the low of the previous bar, and this bar broke the high of the previous bar. But this this is the first bullish leg which was over. Then this second bullish leg was over. But there are so many overlapping bars. You should wait for some more time. It is a sideways movement. Let me throw it on the chart. This is a sideways movement. But the health of this channel is bearish. You can clearly see the price is in the downward direction. Okay, even though it was in range, the price was making lower high, lower low, lower high, lower low. Okay, the price was going down. What we can do, we can look for second entry short from the swing low or failure of second entry long. Counting from the swing high, this was the first entry long, this was the second entry long. Since there is a resistance here and all the three high of the three bars are almost the same level, we can start counting from this swing high. Okay, this is first entry long and this is second entry long. But the second entry long failed. It did not make 2-3 bars green bars here. This green bar even has higher wick on the upside. Okay, so we have failed second entry long here. This bar is the failed second entry long and it is at trend line. Failed second entry long at trend line. Actually, this is not a very good trade setup because there are a lot of overlapping bars. You can skip this and wait for some more time. Okay, counting from this swing high, you can look for this is the first entry long, this is the second entry long which failed. This is a better setup. This failed second entry long at trend line and 21 EMA. This is high probability setup at key entry point. This is a better trade. One should have waited. Let me see. The risk is of 23 points while the reward is of around 35 points. Okay. Here the day was not very good for retail traders in the initial period. We got the trade at around 9:38. After the break of this support, there was breakout as well as retest of the support, retest of this level. First there was a breakout, then retest of this breakout level. So the context was good. The market was in the downtrend and we were looking for failure of second entry long, and we got it at resistance as well as trend line as well as 21 even. This bar is really a very good entry. Okay, let's go to any other day. Let's go to 16 September 2024. Okay, this looks clean. What was happening the previous day? The market was sideways. The market was clearly sideways. Okay, let us. So there was a breakout and there was a retest of this breakout level here. Okay, and it was also a support of 21 EMA. Okay, let us see, can we find second entry long or the failed second entry short here? Since the price is breaking out and retesting, we should wait for the retest and then we can look for trades. This is the swing low. Okay, counting from this swing low, we can see this is the first entry short and we have got the second entry short here, and second entry short failed and we are in the upward moving direction. This is the failed second entry short and we can draw a trend line here. We can have a parallel channel drawn here. So this is high probability setup. There was a breakout of the previous sideways zone. Okay, then there was a retest and 21 EMA acted as support, and then we have failed second entry short, that too at trend line above 21 EMA. So this is high probability setup. You can enter on this green bar. Okay, what is the risk and what is the reward. The risk is of around 15 points and the reward is of around 26, 27 points, almost 1 is to 2. Okay, let us go to any other random day. Let us move to any of the day. Okay, let's see. The previous day, the market was in a bull channel. There were 2 leg movement and there were 3 leg, 4 leg. Okay, let me draw a single white channel. Okay, market was in a bull channel. Okay, there was a break when they were opening on this day on 7th June 24. After the break, we know there will be an attempt to form a new high as per the price action rule for trend 9. This was the high. Okay, this was the break of the trend line. I think you are aware about the rules of parallel channel. If not, you can watch my other videos. Okay, so we were looking for new high formation. So we need to have failure of second entry short or second entry long. Okay, first you need to understand the context. Why we should enter the trade. You need to wait at key entry point for the proper bar pattern to form. Here we are looking for second entry long or fail second entry short. But did we get that? This is the first entry short, this is the second entry short. We waited for the failure, but the market here has got lot of overlapping bars. You can see market has gone into a range. So what we basically wait for? Fade or breakout in the direction of the trend. Here was a breakout, here was another breakout, and both the breakouts have failed. The breakout failure, see the failed breakout, and this breakout failure is at the support. When we are in range, we have the first rule, buy low, sell high. So we are buying at the low, it means at support. Here we have seen the failed breakout and the market is expected to move in the direction of the trend. The previous trend was bullish. So one can enter here if there is a second entry long, right? You know the context here. We have a failed breakout. We are fading the breakout in the direction of the trend. Okay. And already we know the market is bullish. Okay. So let's see if we get the second entry long here. Counting from the swing high, we have the first entry long. Let me zoom to show it to you. This bar broke the previous bar high, so we have the first entry long. This is the mother bar, red bar is the mother bar, and this green bar is the inside bar, whose high was broken by this hammer looking bar. Okay, let's see if we get the second entry long. Yes, we have the second entry long at the support. Okay, this doji bar broke the high of the previous bar. Okay, so this is high probability setup at key entry point. What is the time? 9:54. Okay, within 45 minutes we have got the first trade of the day. Okay, this is your demo to show how we can find a good high probability setup at key entry point within the 30 or 45 minutes on the 1 minute chart. This is the first part. I will be making another part separately and you can check. Thank you.